Welcome to Bidwells Office and Lab Market Update, September 2021. Thank you everybody for joining us this morning. I'm sitting here from what appears to be a much busier West End. People naturally want to socialise, and it's really positive to see. Positive encouragement for our office and laboratory markets too. Sue, if you could move on to the next slide, please. For our Bidwells office and lab markets, the major story has been the extent to which we have seen huge capital markets activity across the region, but heavily focused on Oxford and Cambridge. Activity to date in 2021 is 39% up on 2020 as a whole. You will see from the bar chart, the current total stands at just under 700 million, but we're already aware of substantial deals under offer, which will increase this total dramatically. And further opportunities are coming into the market, such as the GSK site in Stevenage, Cambourne Business Park, Grafton Centre, which will boost this total further. The consequence of this volume of capital is a tightening in yields for both the office sector and the lab sector. But what is really interesting is the crossover in yields for labs, which are now trading at a premium to offices compared to a discount previously. The other big change is the type and nature of investors we are seeing is different. There are very few UK institutions, there are more overseas investors, and there are more specialist investors. Some active players have included Brydell, Brockton, Morgan Stanley, Mission Street, Oxford Properties, Bruntwood, Brookfield, Aviva PSP, and Sue, if you can move the slide on, British Land, for whom we have just acquired the Peterhouse Technology Park in Cambridge, shown here, from LaSalle and JLL for just over 75 million. Thank you, British Land, for letting us help on that one. So why are investors so committed to get exposure to these markets? Are the yields justified by the growth potential? That is the key question for today's seminar. So first up, we'll have Sue Foxley, our research director, giving an overview. Malcolm White, our research consultant, will talk you through the half-year stats. And then our business space agents, Rob Beatson, Max Bryan, Holly Dawson, and Will Jones, will cover the key trends in Oxford, Cambridge, Milton Keynes and Norwich. And then we should have some time for questions through the Q&A box. Please feed these through as we go, and we'll pick up what we can at the end. So Sue, over to you.
Thanks, Saul, and good morning, everyone. Well, what's clear is the interest and the intense demand from an investor point of view on across the arc, and a lot of that really is being driven by the interest in science, which I suppose is inevitable after the last year. The arc is home to an awful lot of science. If we look at the commercial space as around 20 million square feet across the arc, and there's a further close to 20 million in what we call is sort of the academic and research institute space. So it is a cluster of some scale. I think probably if you then focus down on the two core clusters where the majority of that space is dominated by the science, life sciences, it represents a third in Oxford. These are 2020 figures, we're just updating these at the moment, and over half in Cambridge. And that is spread across parks across both markets. But I think the point that I want to just make before I hand over to Malcolm is the fact that life science is complex. Not all life science, as we can see here, is in labs. Nearly 20% of our floor space is in the office market. And also there's an awful lot of tech. And if we're just looking at the Cambridge market, over a third of our office floor spaces and tech. But what we're finding from our project that we've just started looking at Life Science 2030 and where the life science sector is going to go, is that an awful lot of the tech space is actually dedicated to the life science sector, whether that's through AI drug discovery or the quantum computing needed for cell therapy, gene therapy, and the data processing power there. But also, and we're going to talk about this a little bit later in some of the examples we'll talk about, is in the robots. And this, of course, brings in other locations such as Milton Keynes, where we've got the university that will be focusing on robotics and AI. So it's a complex market, and we're going to talk a lot about labs today, but actually what is really important is that wider interrelationship across the market. So with that, I will hand over to Malcolm, who will take you through our H1 figures. Thank you.
Thanks very much, Sue, and good morning, everyone. Just want to spend a little bit of time this morning, and we're running on quite a tight timescale, so I'll skip through this quite quickly. And if there are any areas that you want further elaboration on, then please get in touch with us or send in a question. We've been doing, this is just an update on some recent work we've been doing where we're looking at the size. We already had a very good picture of the Cambridge laboratory market, but we're expanding that and extending that into the Oxford market. And size of the commercial laboratory markets in the ARC or across our two main locations is about 3.84 million square foot. Cambridge remains at the fulcrum of that, really, with close to 3 million square foot. But the Oxford market, whilst being around about a third of what the Cambridge market is growing quite quickly. What we've seen in the market is take up since the start of the pandemic, or since the end of 2019. We've seen about 360,000 square foot of take up in those markets. And that's broadly in line with trend activity over the past 5 years. Just on to the next slide, please, Sue. Just tracking the growth in floor space in both the Oxford and Cambridge markets over, this is looking 10 years, but particularly focused on the last 4 or 5. 3/4 of purpose-built space or occupier fit-out space in Cambridge. Around about 1 million square foot has been added in Cambridge since 2017, increase of about 51%. And in the Oxford lab market, we've seen an increase of 325,000 square foot, growth of 60% since 2016. Next slide, please, Sue. Looking at the take-up trends, we've only got information for the Oxford market going back to 2015. It's probably fair to say that the market before that period was a little bit immature, and still a little bit immature now, but is maturing quickly. But what we've seen, annual average take-up in Cambridge over that period, of course, being influenced heavily by the 2015 pre-lets to AstraZeneca and Amgen at the Science Park, Cambridge Biomedical Park. And in Oxford, we've seen an acceleration in activity in the biomed sector and in the lab sector since 2017, to the extent whereby the market really has outperformed in most years the activity levels that we've seen in Cambridge. Still in a 5-year run, we've got average take up of about 120,000 square foot. If we were to combine those two, overall take up of those two markets over the past 5 years, probably about 320,000 square foot per annum. Largest lettings in the first 6 months of this year have really been focused in the Oxford market. Largest letting in the lab sector, about 42,000 square foot at Evotech at 95 Park Drive, former Immucor building, and also Oxford Biodynamics taking an office building in Oxford Business Park, circa 24,000 square foot. Next slide, please, Sue. But I guess the big story really is how demand for the labs market has really accelerated, particularly since the end of 2020, where we've seen an uptick in requirements, square footage, just under 1 million square foot required. And I think that's kind of typified and quite interesting to see the depth of the market now, whereas in our previous peaks of demand, which were dominated by several larger requirements, this time around, whilst we've got some larger requirements coming back into the market, actually we've got a far deeper level of demand with more than 50 requirements across the two locations as a whole. Next slide, please, Sue. Just breaking down requirements at the end of H1 2021 between the different size bands. The numbers in brackets here are numbers of requirements in each of those sectors. Fair to say that the larger requirements above 30,000 square foot account for best part of 51% of overall floor space required. But I think some interesting trends coming in that sort of 10 to 30,000 square foot as well, where we've got best part of 19 to 20 requirements looking for space. Just worthwhile adding, this is really the first time we've been closely monitoring the labs requirements sector for laboratories. So we don't have a historic series on the Oxford market, but in Cambridge, we've seen a 48% increase in requirements in H1 2021. Next slide, please, Sue. And the big issue really, and this is almost like a cry out for more space to come through, supply levels across both the Oxford and Cambridge market are exceptionally tight. We have just over 100,000 square foot, and remember the figure compared to our current requirements, and those requirements that we've got in laboratory space are active requirements. We've only got 100,000 square foot of space that's currently there, and actually at the end of H1, more than 70% of that was under offer. We've got two major refurbishments coming to the market in H2, which may help to soak up some of that demand. 98,400 square foot at Portway Building, Granter Park, and also the Emmanuel Centre at Chesterfield Research Park, which is about 38,000 square foot. Worthwhile saying that both of those, since the end of June, have gone under offer. Next major lab developments coming through are going to be delivered in 2023. We've got 100,000 square foot coming on at Discovery Drive in the Biomedical Campus, and in Oxford the major schemes, two schemes, retail repurposing schemes. We've got the repurposing of the Clarendon Centre to provide lab-ready space, and second scheme, which is quite interesting, two retail warehouse units at Botley Road in Oxford are currently going to be converted into lab-ready accommodation. Both of those schemes providing circa 60,000 square foot. What's happened to the rents? Well, we've seen a gradual increase in rents, and there's a little bit of a mismatch here between the Cambridge and the Oxford market. Whilst Oxford is an emerging market, we can see that fully fitted space is currently trading a little bit of a premium. Part of that, I expect, due to shortages of stock and the less immature market. So pricing in Oxford at the moment is kind of finding its level, I think. Next slide. please, Sue. And just looking forward, where are we expecting rents to get to? Just remember at the back of this, and these are at 2021 figures, are as at the mid-year point, we're expecting Cambridge rents to be up to £50 a square foot by 2022 and hit 57,000 square £57 per square foot by 2026. The Oxford market again is moving ahead. There isn't anything really significant lab development that we've got coming through imminently. And in fact, a trend that we're tending to see across both markets is that developers are looking to deliver lab-ready buildings rather than fully fitted labs. Next slide, please, Sue. And just moving on to the office market, and we'll run through this fairly quickly again. Next slide, please. Take up, unsurprisingly, and this is across all of our 4 markets that we've got in the ARC. We've seen, unsurprisingly, I think, that activity levels have dropped off in 20 and first half 2021. Majority of that was really due to the sort of phased exit from lockdown in H1 this year, third lockdown. The real story behind it, I suppose, is that there's been a lack of larger deals in the first 6 months of this year. Largest transaction in H1 was the 26,000 square foot letting to Department of Works and Pensions at Phoenix House in Milton Keynes. Clear evidence, I think, that the next 6 months or the second half of the year is going to be much stronger. At the end of H1, we had around about 420,000 square foot under offer across all of our markets. And we are aware that there are several other deals that have been converted in the past 2 to 3 months. Next slide, please, Sue. I'm just looking here at each of the submarkets and how they've performed half year by half year over, particularly focusing in on the past 18 months. We can see that Cambridge had a sort of fairly slow start in 2020, obviously impacted by the pandemic, but a bounce back in the second half of the year. We've seen that fall back again slightly in the first half, but as I've already mentioned, there are a number of sizable deals that have already been signed, I think, and will be coming into the figures in H2. Oxford market, again, a very interesting one, quite a slow start to 2021, bounce back in H2, and we've seen a slowing again in H1. I think the big story in the Oxford market is that whilst overall office letting activity has been quite modest over the past 18 months, we've seen a real switch of emphasis in the market towards that lab sector. MK, a good H1 in 2020, but the past 12 months has been a little bit slow. I think we've got a number of fairly big deals coming through, or good sized deals coming through in MK in the second half of 2021. And the Norwich market, very slow start in 2020 H1, but gathering momentum, and we've seen a big uptick in demand in Norwich over the past 6 months. So we're expecting a far more buoyant market. And where's the majority of that demand really been coming from, or activity been coming from? And this is an analysis of take up by different sectors. And if we just look at the sort of the darker blue shades are what we call knowledge intensive businesses, so biopharma, IT, and other knowledge intensive businesses. And the lighter shaded blue are more traditional bases. Worthwhile saying that lighter shaded blue sector, which has shown a little bit of an increase in activity over the past 18 months, includes a number of sizable lettings to co-working businesses and operators who have been strengthening their position in both the Oxford, Cambridge and MK markets. Next slide, please, Sue. And contrary to the experiences of the lab sector, where we see a market that's really tightened, we can see that suppliers has increased a little bit, up by about 550,000 square foot over the past 6 months. Majority of that due to a number of larger buildings coming to the market. We've got 117,000 square foot new builds at Cambridge Science Park. Santander putting their out of town call centre on the market. I think they're still in occupation, but that's all in the light of moving to their new 475,000 Unity Place in the city centre. We've seen a fairly large slice of space come on at Oxford Business Park, and in Norwich, Aviva again are marketing 2 of their out of town buildings at Broadland Business Park and consolidating into their city centre offices. Next slide, please, Sue. So across the markets, these are the current availability rates. Just to give you a bit of an idea where we've moved from. In MK, we've gone from 10.9% at the end of 2020 up to 14.7%, but remember part of that's due to the Santander space. In Oxford, we're up from 8.7% to 9.7%. Cambridge up from 11.7 to 13.1%. Fair to say that that's due to the large building, 117,000 square foot, building 2 at Cambridge Science Park, which I believe is either under offer or has been, terms have been agreed. And Norwich up from 5.4% to 8.1%. So looking at the demand picture, next slide, please, Sue. Demand for offices have pretty much hovered around that sort of 2, and this is across all of our locations, have hovered around 2 to 2.5 million square foot over the past 4 to 5 years. Requirements in Oxford and Cambridge are dominating though that level of demand, and both Milton Keynes and Norwich, whilst they are smaller in terms of the overall requirements, we're seeing momentum gathering in those markets. And just on to the next slide, please, Sue. Where are we in terms of demand in each of the markets? We can see that Cambridge at 1.1 million square foot, up 21% in the first 6 months of this year. Norwich up to 170, best part of 170,000 square foot, and we've seen an 80% increase in demand in Norwich. MK up by 13%, and the Oxford picture that reflects both offices and labs. I think there's a fairly even split between those 2 sectors. Whilst we've seen office requirements tightening a little bit, what we've seen in the lab sector is a significant strengthening. Next slide, please, Sue. And comparing the 2, just the imbalances between supply and demand, and I think this is something that we showed you last time, and for comparison purposes, the dotted lines show you where we were in H2 2020 and where we are today, or at the end of H1 2021. One of the things worthwhile illustrating, or I think it's worthwhile illustrating here, is whilst these are snapshots, they can change quite swiftly. We can see there that release of larger buildings has pushed, our headline last time around was the lack of larger buildings. The release of some of that additional space by fairly established office occupiers has pushed our sort of imbalance figures back quite a lot. Next slide, please, Sue. I'm breaking that down in between each of the markets because, of course, that's across the arc, the graphs we looked at last time. This is looking at each of our submarkets and their own relative positions. We can see that Cambridge, still a significant undersupply of larger buildings. And I think an interesting one in the Cambridge market where we've seen a flip round from an oversupply or a surplus of buildings in that 20 to 30,000 square foot to an under supply position. In the Oxford market, again, because of the release of those larger buildings, we've seen that completely flip around. It's worthwhile saying these are just looking at office requirements. I think last time we did the analysis in Oxford, we were also including the laboratory supply and demand figures. The supply position in laboratories, really, the story there is one of we just need more space. MK, again, switching around, larger building coming. I think the Santander site may make its way into alternative use, so that may not really be a true reflection of the market in terms of MK. And then in Norwich, whilst we've got a relatively strong position in terms of supply for potential for occupiers, worthwhile picking out one, the way that the sub 5,000 square foot market has really seen a tail off in oversupply position, and also the absence of anything in the 20 to 30,000 square foot market. Next slide, please. And on to rents. I'm just going to finish these fairly quickly now. On to rents in terms of where we stand at the moment and where we've moved over the past 6 months. MK market has been stable. So rents staying at £28 and secondary rents at £25. Cambridge market, prime remains stable to the mid-year point, but I think we've moved on a little bit since then. And the secondary market, we're seeing some mixed messages coming through at the moment on the secondary market with increases in stock coming on. Oxford prime office rents, we can see the differentials between Oxford and Cambridge now have narrowed quite substantially. Prime rents up again in Oxford to 47.50 and secondary remaining stable at 35 quid. Next slide, please, Sue. And just a quick snapshot in terms of our forecasts. 2021 H1, we're expecting by 2022 where each of these markets are going to be getting to. Cambridge, we think, will get to £52 and 57 by 2026. Growth rates between Oxford and Cambridge averaging in at 3% per annum, and both the MK and Norwich markets at 2.5%. Worthwhile saying the growth patterns between each of those markets is slightly different. So there is a little bit of difference in terms of the trends. Thank you very much. I'm going to leave now for questions at the end of the session, but I think Sue's going to introduce the agents to talk about their respective markets.
Thanks, Malcolm. That's great. So I'm just going to hand over now to each of the agents in the markets, and we can just talk about some of the deals and hear a little bit about the detail that was covered in those figures. So over to Max. Thank you.
Good morning. So I suppose any initial pessimism that we had beginning of H1 with lockdown 3 tightening was very short-lived in the Cambridge office lab occupational market. As Malcolm's mentioned, lab demand obviously continued its 2020 upward climb, but concurrently on the office side, we saw demand steadily gain momentum month on month. And I suppose by early spring, we had demand surpassing pre-pandemic levels and actually at the highest levels for 4 years. There's been no lull during the summer kind of activity as well, so that has continued. So although actually H1 offices transactional take-up volumes were quite restrained for H1, down a third from our kind of long-term trends at 172,000 square feet. This needs to be viewed, I guess, in the context of no plus 20,000 square foot transactions. So the steady take-up has been carried by the smaller and innovative occupiers, which is so key to the Cambridge city's economy. So a key transaction, I think, for H1 is Old Swiss, and this is the creation of a new R&D office quarter, a 15 minutes walk from the central station, and is the repurposing of a century-old laundry site or former laundry site. So, I mean, it's quite interesting. In a city full of many historical buildings, there are very few larger former industrial buildings which are kind of ready or available for conversion. And this unique heritage conversion of space with all the services and performance of a new conventional office has proven very popular with occupiers. So phase one, which was just under 20,000 square feet, was pre-let to tech giants HP, plus an education provider CATS, and at rents at £40 per square foot, was combined one of the largest transactions in the city centre. I think the scheme kind of shows actually the extension of the city centre markets to new locations that can deliver exciting product from the traditional cores. There'll be a second phase deliverable here actually in middle of next year into a city centre market, which will have depleting supply. So if we could move to the next slide, please. And although, as Malcolm suggested, the availability continued to rise slightly in H1 in Cambridge for the office market, behind the raw stats, the actual stock available for occupiers to choose from and not under offer is already decreasing and quite sharply. So the H1 increase in vacancy are largely due to the 120,000 square foot, which completed at 2 Cambridge Science Park, which is under offer. So that will also come off the stats quite quickly. But offices take up in Q3 is already at over 110,000 square foot, and we've got a couple of weeks still to go in the quarter, and we are tracking more than double that volume under offer. Whether that will come through in Q3, Q4, but it will ensure that we are back to pre-pandemic levels of take-up. Reassuringly, I think Q3 has also seen the return of the larger transactions. We've had 2 over 20,000 square foot to date, both on Cambridge Science Park. The largest being 37,000 square foot let to Microsoft at 198 Cambridge Science Park. So with demand increasing, availability falling, where is the supply coming from? And there has been some movement on some of the larger schemes, plus 50,000 square foot during H1 as well to report. So at 1 Cambridge Square, outside Cambridge North, that begun on site during the beginning of H1 and will deliver 95,000 square feet towards the end of 2022. And also Brooklands, that received consent during H1 and will commence on site later this year, and will deliver 67,000 square foot middle of 2023. As it stands today on the office side, there are no other speculative 50,000 square foot plus office buildings with a fixed date for PC that we can kind of line up to and are confirmed. So if we move to the next slide. The labs market for H1 take-up really was just limited by a factor of the very, very tight supply. Only 37,000 square foot of take-up was delivered in H1, and this was to relatively small and scaling businesses. So it was spread across 21 transactions, and there were only 2 transactions over 5,000 square foot in H1. The activity was spread across all the Cambridge parks, the likes of the Bioincubator and the Cambridge Science Park, Baberham, Science Village at Chesterford, with much of the space being fully fitted to meet the smaller lab occupiers' requirements for business and timeframes to move very quickly and be operational quickly. Q3 take-up rates have already picked up, the largest letting year to date, 13,000 square foot to Cambridge Glycosciences, scaling out of the Bioinnovation Centre to second-hand lab space at 210 Cambridge Science Park, which you'll see a picture of there, and supporting the kind of the rapid growth and scaling of these businesses. But with limited supply, occupiers have also shown up to take this second-hand type of space in order to be operational quickly. And where we've seen any lab space that has been vacated, it's been possible to actually place that under offer to incoming tenants often before they have left, so minimising voids, and therefore stock only very fleetingly appearing on our availability stats. So the shortage of wet lab spaces have led occupiers to seek and locate buildings that can be lab enabled. And H1 did see some transactions at the Works and also Grant Centre, Grant Park, that provided spaces where occupiers can fit out from offices to kind of lab spaces they require. As Malcolm mentioned, there are a couple of large lab refurbishments which will PC during H2, both at Portway and Emmanuel, but they're not going to ease the availability shortage that we see in the market, both being fully spoken for. But they will obviously move on rents, and they will also see the return of much larger lab transactions. So with the availability critically low, H1 did see progress with the detailed planning consent at 1,000 Discovery Drive on the Cambridge Biomedical Campus, which will deliver over 100,000 square feet. But the message, I think, from Cambridge is that much more space is needed to meet the increasing demand that we see in this in the wet lab sector. So I'll at this point pass over to Oxford.
Thanks, Max, and good morning, everyone. As you've heard today, I don't think it's necessarily news anymore to say that it's the science and tech sector that continue to drive the office and labs market in Oxfordshire. Last year, over 85% of all commercial transactions were completed by organisations linked to the knowledge sector. And this year, based on what we're seeing, I think it's going to be even higher and probably likely over 95%. If you could just flick on to the next slide, please, Sue. So the region is continuing to see huge inflows of capital investment into organisations in the ecosystem. And just looking through the data yesterday, we've now tracked over 1.5 billion of raised funds coming into Oxfordshire year to date. And I think I probably say the same thing in every one of these presentations, but this is a really staggering figure. We've just never seen this level of investment coming in. And once again, it will be record breaking for yearly fundraising stats, with a quarter of the year still left to go. So of no particular surprise, it's continued acceleration of investment coming into the life sciences sector, and particularly organisations linked to drug discovery. This is both into large established organisations such as Nanopore, Exscientia and Evox, as well as the spin-outs. And indeed, in a report published by Bowhurst in July, Oxford University was ranked as the #1 university in the UK for rolling out of life science spin-outs, with 60 life science organisations now coming out of the university. Oxford has also just been ranked as the #1 university in the world for the 6th consecutive year in a row by the Times Global Rankings. So Cambridge guys still trying to knock us off that post, but not quite yet. So how's this been translated into real estate? Well, it's obviously triggering significant demand in the market as these science and tech organisations come under increasing pressure by their investors to acquire space that allows them to undertake the science and R&D that has been invested in. We're seeing increased demand across all size ranges as organisations scale up, and perhaps most noticeable are the number of 80,000 square foot requirements that are now in the market and actively seeking stock. This amount of homegrown large scale requirements is not something that's necessarily witnessed before in the Oxfordshire market, and just reflects how the system is maturing. Linked to this, and I think it's an important comment to make, is that whilst the level of capital inflow is extremely positive in terms of investment into these organisations, about 67% of the total capital raised has been by just 5 organisations, and this is then triggering those large scale HQ requirements. Now, I think this is something that's worth monitoring, as whilst in the media there's always a lot of excitement around unicorns and fast growth companies, it doesn't necessarily tell the whole story of a healthy ecosystem. Now, having said that, if you take out the funds raised by these big 5, it still leaves roughly £500 million shared by another 32 companies who've been through smaller scale fundraisers this year. So whilst in no way am I saying there's an issue with the science and tech ecosystem in Oxfordshire, I think it's something to monitor and just consider. If you could just go on to the next slide, please, Sue. So supply of space remains extremely constrained in the market, particularly for fitted laboratory space. The photos that you can see on this slide show Oxford Science Innovation Sherard building, which reached PC of the lab refurbishment in March. Now, in my view, this was the most highly spec'd laboratory building ever to be put into the commercial market in Oxfordshire. And I'm pleased to say that we've, in the last week, completed the letting of the final floor in the building, meaning that it's now fully let, with lettings ranging from suites of 3,000 square foot all the way up to our largest letting, which is 12,500 square foot. But having now fully let this space, it does mean that, in our view, there is now no available fitted laboratory space on the market as of today inside the ring road, which includes both the science park and the business park. And this is really quite remarkable if you consider the dynamics behind the commercial market that I've just described above, in terms of the driving force of the science and tech community. We are continuing to see the repurposing of office stock to provide lab-enabled product. And as Malcolm said, we saw further lettings on the Oxford Business Park to Oxford Biodynamics in building 314, which was previously occupied by a firm of solicitors, and then the repurposed building 3500 to Exact Sciences. So it's not all doom and gloom in terms of supply. There is still some fitted laboratory space available elsewhere within Oxfordshire. So for example, on the Harwell campus, there's about 20,000 square foot of fitted lab space in their Genesis units, or Cadans are now delivering fitted space on the Abingdon Science Park. However, what we're seeing is, although it's good to have some supply, it is extremely limited, and already there is strong interest in both of those options. So they will be quickly let, and again, we will continue to struggle with a supply issue. So this lack of supply of lab product in particular is, in my mind, becoming an increasingly critical issue for the science and tech ecosystem. And it raises the question of where will these companies go if the space is unavailable? It also raises issues for new spin-outs coming out of the university and how they are able to grow and develop if they cannot get into, say, the bioescalator in Headington or other incubators, because existing occupiers are not able to take that next step on and free up incubator space. The market needs to immediately deliver science-suitable space in order to solve this issue. So on a positive note, there is a healthy pipeline of development of lab-enabled stock coming into the market. And so this includes the Wood Centre for Innovation, where they are just completing their fitted laboratory space, and that is within the Ring Road. The completion of Building 1 at the Oxford Technology Park later in the year, Harwell's Quad 2 early next year, the redevelopment of the Jordan Hill site, and as Malcolm mentioned, of scale in terms of laboratory development, Lothbury's Clarendon Centre in the city centre, and Mission Street's repurposing of retail warehousing along the Botley Road. And then, of course, there are new phases of development coming through on the Oxford Science Park, at Begbrook and Oxford North in the coming years. So there is a healthy pipeline of stock coming through, but the critical issue is what is available as of today in the market. So that's a brief overview of what's going on in Oxford, and I'll now pass you over to Holly, who will talk you through Milton Keynes.
Good morning, everyone, and thanks, Rob. So in terms of Milton Keynes, Malcolm has already highlighted the continued lack of Grade A new build stock in MK, which is currently limited in central Milton Keynes to just 15,000 square feet at Victoria House, as you'll see pictured there. Last year, we reported that 100 Avebury Boulevard, the latest new build office building, comprising 134,000 square feet, reached 100% letting within 3 months of practical completion. And this clearly demonstrated the market appetite for new build stock. After a pause during COVID, this pre-pandemic appetite is set to continue as we emerge from the pandemic, with those inquiries being registered and the transactions being agreed, demonstrating a distinct flight to quality. Now, that's both in terms of corporate social governance, and the day-to-day practicalities of occupation, such as ventilation rates, to keep staff safe and minimise virus transmission as we see the return to offices. The lack of new build space is, however, applying upward pressure on Grade A refurbished rents, and we'll have seen from Malcolm's differential in those rents that it is an ever-closing gap between the new build and refurbished kit. I'm pleased to report that we currently have terms out pending tenant board approval on Whittingate House, which is pictured on the next slide. This deal is subject to final agreement, but if it is progressed, then it will set a new headline rent for refurbished stock in central Milton Keynes and indeed across the town. The refurbishment of the first floor offices at Whittingate House, the first floor being 35,000 square feet, together with the common areas of the building, was completed at the turn of the year. And it was undertaken with our client USS's responsible property investment policy in mind. And that covered aspects such as health and well-being, travel and transportation, energy and water optimization and monitoring, and also the responsible sourcing of materials utilised during the refurbishment itself. 551 Avebury Boulevard, which is shown on the next slide. Now this is a very rarely available self-contained building of 15,000 square feet. Milton Keynes' makeup is of much larger multi-tenanted kit. And this has been refurbished with similar principles to Whitton Gatehouse in mind, having PC this month and a project that's being completed by our building consultancy team. This and other pipeline refurbishment projects will further underpin that rental growth as we move forwards into 2022. And it will also importantly coincide with the next peak of Milton Keynes lease events, to which the historic fluctuations in take-up have been linked. So historically, 85% of take-up was as a result of existing occupier churn. And this historic reliance has started to shift, which is healthy for the market. And that's principally due to three factors. And that's the ever increasing recognition of Milton Keynes as a tech location, the delivery of the university, as Sue mentioned earlier. It's also due to a competitive rental tone for the new city when compared to other locations, as we've seen certainly across the Arc, but also the wider North M25 catchment area. And also the adoption of hub and spoke models of occupation by London-based occupiers, with Milton Keynes just being a 30-minute rail run out of Euston. So in summary, whilst levels of take-up in H1 have been lower than those of previous years, primarily due to the government's work from home directive, we are seeing improved demand, as we saw on the earlier slides, and indeed the delivery of the right space to cater for that flight to quality in the remainder of this year and into next. And then, of course, the delivery of Grade A new build space in the pipeline of the coming 3 to 5 years. So with that, I'll hand over to Will to run you through the Norwich market.
Thank you, Holly. I'm going to take a quick canter through what's been going on in the Norwich office market. The good news is that the market is beginning to improve. Last year was particularly hard hit by the pandemic, and as a result, it was the worst year since we've been producing our Databook. So if I start off by looking at availability, since the end of last year, supply has actually increased by probably about 50%, and it now stands at nearly 460,000 square feet. And as Malcolm mentioned a little earlier, the vast majority of this increase is attributable to a couple of buildings which Aviva have vacated at Broadden Business Park, namely Willow House. It's 62,000 square feet, and the building you can see here, which is the Horizon Business Centre, which is just over 50,000 square feet. Horizon is actually owned by Aviva, so is for sale as well as to let, and it was one of the first zero carbon buildings of its kind in the country, with the solar panelling on the buildings and above virtually all of the car spaces, generating enough electricity to power the building when it's at full capacity. Only about a third of current availability is situated in the city centre. And this is down to something we've covered previously, the fact that many office buildings were converted to residential or student accommodation. And also there's a distinct shortage of city centre Grade A space. Next slide, please, Sue. Take up for the first half of the year was just over 70,000 square feet, which was more or less the same figure as for the whole of last year, so a positive sign that things are getting better. The largest deal was at the Union Building on Rose Lane in the middle of Norwich, where Naked Wines took 11,000 square feet, albeit on a relatively short-term basis. And the photograph you can see here is of Discovery House on Norwich Business Park, just to the south of the city centre, which was vacated by Virgin Money just before the first lockdown. And we've just sublet 3 suites in the building, ranging in size from 4,000 to 6,000 square feet and totaling about 16,000 square feet. And these all happened in May, June of this year. Prime rents, as Malcolm said a little earlier, £17 a foot, but we're also seeing rent-free periods probably nearly double now, and moving out from around 6 months from just before the first lockdown to pretty much 12 months or even a bit more now. Next slide, please, Sue. So what's been happening between now and the end of June? The market, as I said before, has continued in an upward trajectory direction, as occupiers are now starting to return to their offices. And the general consensus among the requirements and the companies we talk to is that members of staff are being encouraged to go back to their offices and probably work at least sort of 2 or 3 days a week in the office. The number of requirements is up by about 25% to 31, and it's also encouraging to see a number of larger requirements come to the market as well. The photograph you can see is of the Bertram's building on Peachman Way at Broadham Business Park, which we have just completed on, so hot off the press. It was 16,500 square feet, self-contained, fully refurbished, and we let it on a 10-year lease with a 5-year break to Evander Glazing and Locks, who moved from another building on Broadland at a rent of £13.50 and 9 months rent-free. Other, albeit smaller, lettings have taken place, and with other space going under offer, we could well see TakeUp return to close to pre-pandemic levels. This last slide is of the LMA Barnes building at Norwich Research Park, which we've just taken on for South Norfolk District Council. And whilst Norwich doesn't have the same concentration of science research parks as, say, Oxford or Cambridge, the Norwich Research Park is a world-leading research centre into the environment, food and health sectors. The building is 16,800 square feet. It's to be fitted out on the first floor as offices and labs on the ground floor, and we're quoting a rent of £350,000 a year. Thank you.
Brilliant, thanks. Well, right, we've got a few minutes left, so we're going to open up for a few questions we've had. And just while I'm stop sharing the presentation, I wonder if I could ask perhaps Saul to a couple of questions have come in regarding conversions from both industrial and also retail. So I wonder if perhaps Saul could respond to those.
Yeah. The answer to that question is yes, there is evidence of conversion taking place. Certainly in both Oxford and Cambridge, a number of industrial buildings have been converted, and you get quite a surprise when you go in some of these industrial buildings to see a sort of virtually a lab building built within the industrial building, and that has occurred for a number of years. And there's one or two very big examples of that in Oxford.
And I would say, Saul, to the audience, join our industrial webinar in I think it's 3 or 4 weeks' time, and we'll talk further about it, because it is a key topic that we're seeing certainly in the Oxford market and the Cambridge market. This repurposing of industrial stock into lab buildings.
Yeah. as far as retail is concerned, there are some examples emerging. There have been some acquisitions of retail warehouse units with a medium-term plan to convert those into labs, and they convert quite efficiently. And in the centre of Oxford at the Clarendon Centre, some of that shopping space is being carved out and redeveloped for labs. And certainly when the Grafton Centre was put to the market about a month ago in Cambridge, that was very much a selling feature that could be achieved there too. So I think for retail, the examples will come. For industrial buildings, they're already here.
And sorry, and offices as well. There's one just coming on offices as well.
Yeah, I mean, the Sherard building, which Rob showed you earlier, was a conversion of an office to a lab. At the Oxford Business Park, there's been a number of examples of that, and there's also similar examples in Cambridge. You can't really convert an office into a heavy-duty wet lab very efficiently. You just haven't got the right bones of the building to achieve that. But if you're looking at dry labs and clean rooms, it is possible, but it is not cheap.
Thank you. Both Will and Holly mentioned the city centre market, but I wonder if Max and Rob could just talk very briefly about the city centre market and sort of how that's relating to the park market and the activity there at the moment.
I think from Oxford's point of view, the city centre market is just completely constrained by supply. I mean, there is no supply of laboratory stock at all within the city centre, as we've sort of mentioned a number of times. The repurposing of the Clarendon Centre will be the sort of first phase of commercial laboratory stock coming into the city centre. With offices, again, there is a real lack of supply in the market. I did a search quite recently, and there are no options really above 5,000 square feet within the city centre. We are seeing some new stock coming in. So Lothbury's North Bailey House will be coming forward in the next 12 months, and that will provide prime grade A stock in the city centre, which is just something we haven't seen since the letting of the jam factory last year.
Okay, thanks. Max?
Yeah, I think, well, similarly, in Cambridge, there is no lab market within the city centre. That I think is something which has been looked at by a number of people to try and bring some supply into the city centre. In terms of availability, that is predominantly available on the out of town parks. I think there is a slight more nuanced, because we have edge of city parks as well, which within a small city are actually quite accessible from the city centre, and for the offices, there is actually transfer between city centre demand, which is city centre focus, which will also look at edge of city locations, but the vast majority of supply is probably on the out of town parks, and therefore there isn't a mismatch there of supply and demand a little bit.
Great, thanks. There's a few other questions. We'll probably come back to you individually on those, but just if I can kind of sum up with one of them, just in terms of I suppose the headwinds for your market. What's the thing that worries you, in a sentence on each of you?
So for Oxford, it's supply of stock at the moment. We've got this tremendously exciting story of this growing science and tech ecosystem, huge amounts of capital investment coming in, and the question now becomes, where can these guys do their science?
Okay, thanks. Will?
I think from a Norwich perspective, probably the shortage of decent available accommodation in the city centre. There's plenty out of town, but there will be companies that won't want to move out of town. They want to stay in the city centre, and with the exception of the Gerald scheme at St James's Place, there is very little else of a grade A quality.
Excellent, thanks. Holly?
Similarly to Will, and as mentioned earlier, it's currently that lack of grade A space which is now starting to be addressed in the marketplace. So that's our current issue, but as I say, as we move forward, that pipeline is being addressed.
Thanks. And Max?
Yeah, a similar chorus here. Yeah, we have a shortage of supply, and the real challenges are that we have the return of large lab and office requirements, and a very limited number of options that they can go to within any time, within any short time frame.
Great, thank you. Well, thank you very much. We're 11 o'clock. Thank you for the questions. We will come back to you separately, so we really appreciate those. Thank you to everyone and Malcolm for the presentation. We appreciate that. We have got our next event that will go out on LinkedIn, and invitations will be going out in October on the industrial market, and there's an awful lot of crossover. So we'll probably be talking about very similar issues again in many respects, in addition to the whole distribution story when we come to that. So we hope you'll join us for that. Thank you very much for your time, and have a good morning.